can you learn to trade the high type flag in under 5 minutes? Probably not, but let's give it a go anyway. MarketSmith are the sponsor of this video. If you're interested in a discounted trial, there is a link in the comment section below. Okay, the timer has begun. Now, I'm not going to go really down into the weeds here. I'm going to give you more of an overview. There are more in the weeds videos if you search the channel. But I'm going to teach you the 4 areas of each trade for a high type flag. Number 1 is identify. You've got to be able to first and foremost identify a high quality high type flag. Number 2 is I control my risk. Number 3 is I mitigate the risk, which I also call free rolling. And then number 4 is I optimize the profits. So I'm going to teach you about all those areas. So let's start with identifying a high type flag. What on earth are you looking for? Well, as the name implies, you are looking for a flag. So here is an icon of a flag and it looks pretty similar. You're looking for a flag pole, and then invariably high type flags are going to build higher lows. So you see this here? See how the flag builds higher lows, but then it makes lower highs into a tightening range where volatility from left to right is decreasing. So this here, this is the flag pole, and then this is the flag that starts building there. So if you didn't know what a high type flag is, now you know what a high type flag is. Now there's some nuances within the base as well. So I've labeled here 1, 2, and 3, and you can read some of the labels as well. But in essence, you're looking for price volatility, which you can look at the depth of the declines from peak to trough. You can also visually see it in terms of the candlesticks that they are tightening from left to right, or you could be using bars as well. But you see how the volatility is contracting from left to right, and then you get extreme tightness over in this purple area with the volume drying up. So we'll come on to that in a second. In terms of the volume, you would like to see volume for the entirety of the base. Generally, you may have a few sporadic spikes, but generally drying up from left to right. And then as the pivot forms over here, I am looking for extreme tightness with volume drying up as well. Now, a couple of nuances here. I didn't want to go into the weeds too much, but I'm going to take you into the weeds a little bit. As the flag pole is forming, the best of the best ones will stay above their 10 EMA, which is the black line, and or the 21 EMA. And as the base forms, it should be above all key moving averages. That's the black line 10 EMA, blue line 21 EMA, purple line 50 SMA, grey line 100 SMA, red line 200 SMA. And you see how they're all just trending up really nicely. So the flag pole should look like this, above the key moving averages and just trending really nicely. As the base is forming, the best of the best high type flags will respect their 10 EMA. So see how it's just respecting its 10 EMA over here. As you get a little bit more into it, it may be that the 21 EMA, this blue line, catches up, but the stock should preferably respect it. There may be a couple of quick undercuts, some shakeout demand tails around it, but 10 EMA, 21 EMA, very important. Then as this pivot is forming, in essence, you're looking for a little rectangle. So a mini Davis box, if you've read that book, just a mini rectangle forming in here, which that mini rectangle is sitting on the 10 EMA being the black line, or the 21 EMA being the blue line, and you'd like to see volume drying up. Now the final piece of the proverbial jigsaw for me is I like to see a trigger bar. So a trigger bar is sitting on one or more key moving averages in the context of this little then rectangle that we were talking about, and the volume dries up. That's telling me there's very little supply coming to market, and I can create a very asymmetric risk versus reward trade because the trigger bar should be really, really tight. So invariably I am then buying through the high of the trigger bar with a stop loss on the low of the trigger bar or near the lows of the trigger bar. So in this instance, I use buy stop limit orders. So it would be at 884 with my stop loss at 858, which would be 3%. Now I'm going to give you a little bonus here. If you look at the 20-day or 30-day ADR of the stock, that is the average daily range percentage of the stock. So let's imagine here, this is actually for today's date, it isn't back here, but imagine that it is about 5.46%. I like my initial stop loss to be less than the stock's 20-day or 30-day ADR percentage. That is just a good metric to be looking at, but it should never be in double digits. It should always be single figures and preferably sub 5% for initial stops. Then we move into the controlling a risk. So that, well, I was kind of talking about the controlling risk there. I got a little bit ahead of myself. That's the controlling risk. Then in terms of the mitigation of risk, I'm trying to take all of the risk out of the trade. How do I do that? I sell 1/3 of my position at 2 times my stop loss. So 1/3 at 2 times my stop loss percentage. So 3%, 2 times 3 by my maths is 6%. So I would sell 1/3 of the position at 6%. Then I've got 2/3 left. We're doing a little bit of fractions, a little bit of maths here. So 1/3 I'm going to sell on the close below the 10 EMA, which is this black line here. Then the final third I'm going to keep until it closes below the 21 EMA, which is this blue line. Really simple. There's a few more nuances that I could go into in the trade management, but I don't want to go there in this video. I want to keep it simple, want to give you an overview, and then I'm going to give you something that I just forgot to mention. Let's go back and do it in the identification stage, the relative strength. This is actually a free tool on TradingView. Search my name in the indicators, you'll find it. The best of the best high tight flags will be hitting 52-week highs on the relative strength line, and that relative strength line should be like this. 45-degree angle of attack, okay? Really strong, 52-week highs coming through. A little bonus as well, 2 things to look for. If the stock hits 52-week highs, whilst it's still within the base, the stock is extremely strong. If the stock hits a 52-week high on the breakout bar, it is extremely strong. So just some other things that you can be thinking about in terms of your identification. So that is it, guys. I will wrap it up there. If you want to learn more with my membership site, I have over 100 hours of educational content that go into way more depth than this video. There are links down below if you are interested in that. Thank you very much for watching, and I will see you in a future video.